Hello, this is John Smallwood. Welcome to the Short Takes with John L. Smallwood. Today we're going to be talking about the 5 rules of the financial institutions. Every single day we are interacting with banks, insurance companies, car insurance companies, mutual fund companies, the grocery store, charges here, charges there. And it's really, really important that we understand the rules so that when we're interacting with the financial institutions, we're better prepared. And this is, I don't know if this is really they're sitting in a boardroom and they're really doing this, but the idea is that if a financial institution is going to be successful, these 5 categories, these 5 traits have to be part of their plan. So all the advertising, everything that they're doing is designed to make them feel as comfortable as you possibly can. We have a long track record where you have high ratings, et cetera, et cetera. Once they've accomplished that, now they're convincing people to start giving them money. They want to get that money on an ongoing basis. They don't want to get $1 from you and never get another dollar. They want you to give them money on a systematic basis. So the financial strategies that they're promoting are designed to give the financial institution as money as quickly as it possibly can. And when you think of some of these strategies, dividends to reinvest, dollar cost averaging, short-term mortgages, etc. So it's this systematic flow of money coming into the institution. Like any institution, they have salaries to pay, rent to pay, etc. If that flow of money is not coming in, they can't meet those obligations. Once you feel comfortable with them and you're giving them money on an ongoing basis, all of the strategies promote hanging on to the money for as long as they possibly can. Keep it here, compound it here. The miracle of compound interest is going to grow your capital. And the longer they keep that capital, the better it is for the financial institution. Once you're ready to distribute the money, the strategies that they have are designed to limit the amount of money that you take out. You might get taxed, you might get penalized, you might run out of money. So they want to hang on to the money for as long as they can, and they want to dribble it back out to you. Okay? The 5th rule is they want to transfer the risk from themselves to the client. You start thinking about the different strategies, a lot of the fee structures and the insurance costs and the deductibles and all the things that are out there in your financial strategy, ATM fees, etc., they're passing the fee and the risk of that fee to the individual. You think about a lot of the life insurance products that are in the marketplace is they can change the cost of insurance inside of them, and they pass the risk of investing off to the insured. And the combination of those 2 things could leave the person without any insurance. These are just examples. So the idea is that these 5 rules are constantly driving at the client's plan. And the idea is that if I don't understand that these 5 rules are happening, I'm not going to be able to really interact with the financial institution. So it's very, very important that you understand the 5 rules, because you have to think about this. If those are good for the institution, are they good for me? On that note, we're going to end it here. Please call us with any questions. Have a wonderful day. Talk to you soon. Thank you. Welcome to the end of the video. Smallwood Wealth Management is an investment advisor representative. The opinions expressed by Smallwood Wealth Management and guests on this show are their own. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented for this educational purposes only. Moreover, no listener should assume that any discussions or information presented serves as a receipt of or substitute for personalized advice from Smallwood Wealth Management or from any other investment professional, and is not intended as an offer of solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Smallwood Wealth Management is not a law firm or an accounting firm, and no portion of this presentation should be interpreted as legal, accounting, or tax advice. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Thank you for listening.